Hey guys, it's Sasha. A few minutes ago, Credit Suisse, the bank that was founded 167 years ago in 1856, de facto evaporated because it was bought by UBS. And the world of finance just exploded because this deal is dirtier than a sweaty Jeffrey Epstein taking a mud bath. Investors in Credit Suisse have been shown the middle finger by the Swiss government, and there is something incredibly weird about this deal. So let me unpack exactly what just happened, explain some of the background and why this deal is so dirty. And I will share some thoughts on what this may mean for investors in general, because the newspapers have already declared that the Credit Suisse collapse is financial Armageddon. But let's start with what just happened, because Credit Suisse was in deep trouble back in October. Here is a video from October 3rd by some guy saying that Credit Suisse is about to collapse. Now, I know all this is happening in the back end of Silicon Valley Bank collapsing in the United States, but the truth is the situation around Credit Suisse is not related. Credit Suisse did not have a problem of carrying bonds, paying low yields. No, Credit Suisse had a slightly different problem of being absolutely shit at risk management, completely incompetent management, and repeatedly breaking the law, which is generally considered to be a little bit worse than buying low-yield government bonds. In just the last few years, Credit Suisse was the underwriter for Luckin Coffee, the Chinese company that was going public on Nasdaq when it transpired that their sales numbers were fake. The Credit Suisse CEO stepped down in 2020 because it turned out the bank was spying on his ex-employees. Credit Suisse also had a few problems with investing in dog shit. In 2021, they lost $5.5 billion when Archegos Capital collapsed. They also managed to drop $10 billion into Greensill before that collapsed, and Credit Suisse pleaded guilty to wire fraud and paid hundreds of millions in fines in the Mozambique tuna bond scandal. The very short version of that is that the bank lent Mozambique a load of money for government projects, and a whole load of that money magically disappeared into the ether, which in turn caused the Mozambique economy to implode. So, Credit Suisse was already in pretty bad shape going into 2022 and more recently into 2023, and in Q4 of last year, 110.5 billion francs were withdrawn from the bank, which was substantial. But the bank narrowly avoided collapsing back then. They raised funds, announced 9,000 job cuts, and said that they are going to turn things around. Credit Suisse found a number of backers happy to take on the risk. The Saudi National Bank became the largest shareholder, owning 9.98% of Credit Suisse, investing about $1.5 billion into the bank. And the very weird thing is that immediately after buying 10% of Credit Suisse, the Saudi National Bank then started the collapse of Credit Suisse. On Wednesday, the chairman of the Saudi National Bank was asked if they would put more money into Credit Suisse, to help them. Investors were jittery because credit default swaps were apparently exploding at the beginning of last week, and when the chairman of the Saudi National Bank was asked if they would give more support to Credit Suisse, he replied, absolutely not.
They're all sound, everything's fine.
Yeah.
I don't think they'll need more capital.
And this was the start of the end for Credit Suisse, because the biggest shareholders, who have unlimited money, just announced to the world that they think that Credit Suisse is a dead horse. On Thursday, the Swiss National Bank stepped in and they gave Credit Suisse $50 billion to try and keep it alive, because Credit Suisse is the second biggest bank in Switzerland and its balance sheet is twice the size of Lehman Brothers when those guys collapsed. And you might remember what happened after that happened. But on Friday, things got worse, and Credit Suisse stock closed at $1.96, 26% down from last week and 76% down in the last 12 months. But then, things got a whole lot worse over the weekend. On Saturday, it transpired that something pretty bad was going on with Credit Suisse, to the point where on Monday it could collapse completely and risk taking the banking system down with it. The Swiss regulators and Swiss government stepped in immediately and held meetings with the board of Credit Suisse. And based on what happened later, it kind of sounds like Credit Suisse told the Swiss authorities that their balance sheet is in a state that is technically known as a pile of fucking garbage. It's not clear exactly what the dirty stuff Credit Suisse was showing to the Swiss government was, but the very next day, the Swiss government called in UBS and arranged for UBS to buy Credit Suisse. There were two problems though. First, UBS didn't really want to buy Credit Suisse because, well, Credit Suisse is a steaming pile of horseshit. So UBS apparently decided to lowball an offer of $1 billion for a company that was valued at $8 billion at the end of trading on Friday. In the end, the deal was announced, and here are the details. UBS will buy Credit Suisse at 76 centimes a share, that's about 82 US cents, and given that Credit Suisse was trading at $1.96 on Friday, that means UBS is buying it at a roughly 60% discount. But UBS negotiated hard, so along with getting a 60% discount, the Swiss government is also throwing in 100 billion Swiss francs as a credit line. That's about $108 billion US. That's insane. And the Swiss government is also going to guarantee, absorb up to $9 billion in losses coming from the shit sitting on the Credit Suisse balance sheet that UBS is now acquiring. So you've got to wonder, what is it that they all know, that they've all seen, that's sitting there, that is causing all of this to happen? And here is another kick in the nuts. Investors do not get paid in cash. No. That would be too obvious. Instead, you get to convert your worthless shares of Credit Suisse into an even more worthless share of UBS. Oh, and while all this was happening, the Swiss finance regulator FINMA also decided to help out UBS by saying that around $17 billion worth of Credit Suisse's Tier 1 capital bonds will now immediately become worthless. So anyone who bought these bonds from the bank in the past has now lost 100% of their investment. But wait, I haven't even got to the worst bit, because you see, Credit Suisse is a publicly traded company. It has shareholders. So how the fuck does a public company that has shareholders just get sold at a 60% discount over the weekend with hundreds of billions of dollars in extra perks being given to this other company? Because, usually when that happens, when a company is being sold, the shareholders of the company, the shareholders of the bank get to vote. Would you like to go and lose 60% of your investment by being sold to UBS? Or is there maybe a better way? Maybe you can unwind this pile of shit, maybe go bankrupt and actually have a hope of recovering more than 40% of your money. Well, the Swiss government did not disappoint. The Swiss are famous for valuing people's right to vote. The Swiss regularly vote on referendums on government policy. Last year, the people voted against a ban on human and animal experiments and for limiting tobacco advertising to children. There were 4 referendums in total, but clearly whatever Credit Suisse showed the Swiss government yesterday was so bad that the Swiss government has rushed in and passed an emergency law to prevent shareholders from being able to vote on this deal. You cannot make this shit up. Every shareholder of Credit Suisse just got shown the middle finger by the Swiss authorities. Completely and utterly fucked. The most fundamental rule of company law just got thrown out because a bunch of fuckers in suits sat in a room and decided that it would be so. I guess a law preventing the shareholders of a company from having a say and being able to vote is not important enough to put it up for a debate by the Swiss people, because it's not as important as the 2021 vote on the economic partnership with Indonesia. So the press conference this evening confirmed that Credit Suisse is now gone and will become part of UBS. And the big question is, what are the ramifications from here? Now, first up, all investors in Credit Suisse are completely royally fucked, especially Saudi Arabia, who managed to invest $1.5 billion for 10% of Credit Suisse and have now lost about 80% of that investment in just a few days. And the fact that they started this collapse in the first place makes it somewhat amusing. But is this a Lehman Brothers episode? Are we about to go down the same path as in 2008? Is this the kicker that's going to implode the financial markets? Well, the stock market is certainly going to have an interesting day tomorrow. On the one hand, confidence in the banking sector could not be lower right now. It is so low that the panic itself could cause more short-term perturbations. In fact, the panic itself is kind of the biggest problem here. But it's important to remember 2 things. First, the problems that Credit Suisse had on its balance sheet are nothing new and are not representative of the banking sector in general. Credit Suisse have managed to create an entire new level of being utterly shit at banking and making awful decisions for themselves. And second, the US banking sector has just had the government virtually guarantee 100% of all deposits. The US government has just lent massive amounts of money to banks across the industry to shore up liquidity, and big US banks have now been depositing their cash in smaller banks to prevent them from collapsing and prevent them from having bank runs. Panic, though, is a dangerous word in banking because no bank can survive a complete bank run because they don't have the cash sitting there ready to hand out. But these moves by the Fed and the US government are important, even if the dimwits on Twitter are still busy trying to sell fear and start a bank run regardless. Now, it is possible that on Monday, the US government extends their deposit guarantee from Silicon Valley Bank and Signature Bank to cover the entire US banking sector. Maybe it will happen at some point later this week or next week or whenever, because de facto that guarantee is already there from them bailing out those first two banks. If a third bank was in trouble, say sometime next week, how would the government justify not backing those deposits when they just guaranteed 100% of the money in the first two? Well, I guess the first two did have the venture capital guys who are mates with the government, so it's possible, but it's probably not going to happen. So a guarantee would basically convert the FDIC insurance from just protecting $250,000 per account to protecting everything. The US government has already started buying up the low-yield bonds from bank balance sheets at par value to inject liquidity because banks could only sell them at heavy discounts because the rates have since gone up substantially. And interestingly enough, on Wednesday, Jerome Powell will be announcing the FOMC's decision on the next rate increase. Given this turn of events over the weekend, even a 25 basis point increase now seems unlikely because it is only going to exacerbate the bank balance sheet problems further. The Fed is already having to dish out loans to prop up the banks, which is increasing the Fed's balance sheet while they are busy doing quantitative tightening at the same exact time. So increasing rates doesn't seem to make sense because it would only force the Fed to dish out even more loans and increase their balance sheet as a result. So in a roundabout kind of weird way, this banking crisis may well be the trigger that stops rate hikes. Then as inflation keeps falling, we may see a move to lower rates sooner rather than later because this would immediately ease some of these pressures that the banking sector is facing. And with jobs remaining high and inflation collapsing at the same time, the Fed can kill a whole flock of birds with one stone.